So stocks are looking pretty good today, guys, after we got favorable labor market data, in other words, jobs data. So let's break this down and make sure to follow along for more. So the US economy added 147,000 non-farm payrolls in June, much more than the 106,000 expected by analysts, and the unemployment rate dropped to 4.1% unexpectedly, under the estimate of, well, 4.3%. And last month in May, the U.S. economy added 144,000 jobs while the unemployment rate held flat at 4.2%. And those figures were revised higher on Friday from a previously reported 139,000 job additions in May. So this is good data, guys. Good news that the labor market isn't as bad as people think right now. And this chart right here shows you the change in payroll. You guys see here on the left, and the unemployment rate. I think this is for what, the last year and a half, 2 years. And you can see these numbers here have been spiking up, the change in payroll, which is good. And the unemployment rate, although it has been trending up, it is kind of flatlining here over the last year at about 4 to 4.1, 4.2%. Not bad. So yeah, that's good news for the stock market, but it puts Jerome Powell in an even bigger pickle, right? What's going to happen now with rate cuts? We're still expecting 2 by the end of the year, but there's a lot going on with now the labor market looking all right, pretty decent, unemployment rate coming down. We have obviously tariffs, the inflation threat there. A lot's going on, and Powell's going to have some tough decisions. What do you guys think? Follow along for more and check out the link in my bio for my real-time weekly portfolio updates on Patreon.